Next one on our agenda is the US dollar Japanese yen currency pair. And after some struggle above 115 mark during the previous weeks and the first part of last week, finally the bears managed to get dollar yen lower. We have arrived at 50-day moving average and the daily chart, which is located at 114 area. This is currently the main support for the price, but a lower retracement to the downside is quite possible. If we look at the 4-hour chart, we can see this triangle we were speaking about last week. This triangle was breached to the downside, and currently the pair is consolidating between 115.20 on the upside. Let's paint this resistance level in red. And some interim support was found in the area of 113.70. This is support line. So for now, we can see dollar yen in this sideways channel with 115.20 on the upside and 113.70 on the downside. Looking at MACD indicator, we can expect some stabilization, some consolidation of the pair in this area, but the signal from the moving averages on the 4-hour chart is more negative. So some time at least should pass, or some bullish driver should appear to push dollar yen back above 115.20 mark. All in all, dollar yen is probably most sensitive to the markets and reading of US dollar bullish positions, which were opened on the expectations of higher inflation in the United States. For now, the market has come down a bit about this after having no confirmation from Donald Trump that he will conduct fiscal stimulus policy. Yen also strengthened as a refuge currency, and there is another factor to take into account. It is that Japanese investors have started seasonal cash repatriation. That means more buying of the yen. Still, to have a more long-term picture in mind, we should point out that the yield difference between the US and Japan is still in favor of the United States and will likely keep supporting the greenback above 112 mark. Let's put it at the chart. So the decline and the settlement below 113.70 will surely mean that another leap to the downside will take place, but we think that the pair should find good support around 112 mark. We can have Fibonacci levels, better maybe at this chart. We can have Fibonacci levels of the pair's advance from summer of 2016 to the beginnings of this year. And you can see that the pair has retraced 23.6% Fibonacci to the downside, and the next top 38.2% Fibonacci is located just near 112 mark in the area of 111.25. And also at the daily chart we have a bullish Ishimoku cloud, which is providing support for the dollar yen precisely in this area of 112, 111.24. So if we look at the dollar yen, we should pay attention to the following support levels. And also, we should understand that some brighter outlook for dollar yen is possible on the pair's return above 115.20. In this case, the next target will be located at 117 area. All in all, the economic calendar this week doesn't contain any significant economic releases from Japan. So we will focus on the news from the World Economic Forum, which will take place in Switzerland, and Chinese statistics on Friday. So I would point out that Japan has probably the rarest statistic releases, which are important for the yen. And American data, together the factors which determine the market's risk sentiment, are the main drivers for Japanese yen. So probably it's a bit easier to trade this pair. As stronger yen and weaker dollar yen currency pair is not in the interest of Japanese monetary authorities, then we think that decline in dollar yen should be limited. So I have a fundamental belief in stronger dollar versus the Japanese yen, and believe that the current move to the downside is only a correction, and a good trader should stay active, should stay aware in order to pick up the right movement to enter the market on this correction in favor of the overall bullish trend.